Hello everyone, it's Denzel here. And yes, I know I haven't posted on YouTube in a long period of time. And there's actually a reason for that. Now, you've probably read the title, and a few months ago, was approached by a private equity firm to sell one of my businesses. And what I thought would be one of the best decisions that I've made in my life ended up being my biggest business and life lessons. So I thought, you know what, as it's coming towards the end of the year, let me actually share with you guys what happened, the process, and the lessons I learned during the process. So for those who don't know me, my name is Denzel. I'm based in London and I'm a real estate entrepreneur. Now I've been doing this since the age of 18 and I've got three main businesses. Number one, a portfolio, and that's spread across London and Kent. Number two, I've got my own real estate buyers agency, which is my main business. So we're based in Mayfair and we help high net worth individuals, footballers, celebrities, athletes who are buying properties in prime central London and surrounding areas. And lastly, it's the real estate consulting firm, which I'll be talking about today. And essentially how that works is that we have systems that we implement into boutique agencies for real estate advisors, brokers, realtors, sources, and we implement these systems to help them to scale their business and scale their lead flow. And on the other side, we have a lot of deals, a lot of stock that we collaborate with them and to sell them and make commissions from that. Now, this is like a really good business, well, what I thought, because we were achieving multi-six figures profit every single year, and it was quite a lean team. I only spent a few hours on the business. Now, for a little bit of context, before I got approached by the private equity firm, this was something that I always saw as my cash flow, whereas my rental portfolio was more so my passive income, and then my buyer's agency was like my large chunks of sums, because again, we're charging 2% for properties, doing properties that are £2 million plus, and I was like more so like my savings pot, right? When I started this business, I didn't actually know that I could sell a business. But again, now working within my buyer's agency, because we're working with a lot of founders from the US, from the Middle East who have sold their companies, I was actually able to understand the concept of actually selling your company for large sums of money. So one time I actually got approached by a private equity firm because they saw that the profits that we were making and how lean our team was very rare for our industry. And in fact, our actual model where we actually license the implementation systems to these real estate advisors and brokers wasn't something that is quite common in this industry as well. So when I actually first got approached by them, I was so excited. I was thinking, do you know what? I had that magic number in my head, which I thought they was offering kind of close to. And if I can now invest that amount, I want to be set for life. I can buy 20 properties, rent them out, and literally live a very comfortable life. But I was wrong. And that's because I understood how to make money. I understood how to actually operate a lean business model. But this was more so a cash flow vehicle, more so a lifestyle business than an actual business or a company that's actually sellable. And so today I'm going to go over the biggest lessons that was learned as mentioned. And this is just suitable for anyone who's potentially looking to sell their company in the future, who's looking to buy companies, or who's just interested in business in general. I think it's a very important lesson which you guys can learn. Now, this isn't actually part of my main lessons that I learned, but this is just something for everyone. And that is the power of focus. I feel like when this actually happened, I didn't realize that how long the due diligence process could take. I would think someone makes an offer today and they'll actually sell my business within like a month or so. But the process was actually quite long. And as I mentioned, because I had other businesses, my focus was everywhere. So during the due diligence process, I saw the momentum drop. And as I didn't actually end up selling the company, what initially was a really good cash flowing business started to lose momentum and drop month on month. And that was something that was a very difficult period of time because, it had been such a great year. I had some of my biggest milestones, and what I thought would be my biggest milestone today in business ended up actually kind of putting me on a small downward spiral when it came to that particular business. And I think naturally, due to the momentum that was lost there, momentum was lost everywhere else. So I love to be transparent on this app. And that's probably why I didn't post on YouTube for a while, because I was just quite disappointed with how things turned out. But now I see it as a lesson learned, which I'm going to now implement moving into 2026. Cool. So the first lesson learned was about finances and accounting. Now, as you know, with a cash flow lifestyle business, it's very easy to get carried away with the numbers. I think a lot of people online are talking about 100K months, 200K months, but most of these people aren't actually talking about cash collected and reoccurring revenue. So there's multiple things wrong here, which I'll quickly walk through. So number one was actually counting revenue and not cash collected. Now, when I was actually doing my figures, I would always go based off how much revenue I was making each month. Now, that was really good in one aspect because it looked good and it sounded good. But at the same time, it wasn't always matching with the cash collected. Why? Because sometimes we'll actually take clients on payment plans, and if they do follow their payment plan, what I would put down as the revenue every single month may not actually match the actual money that was in the account. So when I was doing the due diligence, they saw there was a miscalculation with the numbers, and that was something that was pointed out almost at the start. Now, on top of that, it was also to do with VAT. Now, there's a whole story about how my office that I was initially at got changed. So I didn't actually realize that we was actually VAT registered. And for those who aren't in the UK, VAT is essentially an additional tax when you're operating over a certain amount of revenue every single year. And so because we was operating over that revenue, we had to pay an additional 20% tax on that. Now, I wasn't actually charging my clients VAT. Now, because I didn't account for that in the figures, when I was doing my numbers, I was automatically at a 20% loss. But again, I didn't actually calculate that within the actual spreadsheet when it came to my accountant. Another thing that I think was quite a big mistake is that I was too generous too early. Now, don't get me wrong, I was making a really strong monthly revenue. But because I wanted to really focus on my luxury buyers agency, I wanted to delegate as much as possible. So what I was doing was putting multiple people on payroll. I think at one time, our expenses every single month was around £17,000 just for us to survive. And so although we were still making enough profit to actually fulfill that, when months now dropped, those fixed costs will now cause our profit margins to go lower. Now, there's actually a time in the business where these numbers dropped, which I'll talk about later on in the video. And now that caused serious fluctuations and concerns from the buyers because they wasn't too concerned about revenue. They was more focused about how much profit is making consistently every single month and is it actually growing. Where with mine, it will be some peaks where it's, very high, somewhere it's medium, somewhere it's a little bit lower. And that inconsistency was a real big concern for them. And lastly, something that I think most of us young entrepreneurs do is expensing the wrong stuff through the business. Now, again, I've got an amazing accountant. And I think one thing that was my mistake is I wasn't actually meeting up with him enough to actually expense the right stuff through the business. And I think because I had multiple businesses, I was thinking I can put one thing through this business, one thing for another business. And it wasn't actually something that could actually always be accounted for. And so when I was actually correcting the account and matching everything up, I now realized that I was actually taking out too much money from the business. And again, that was now messing up with the actual profit margins. So sometimes I actually calculate the revenue based on projected revenue, and that will now allow me to spend a certain amount, but this didn't actually match to how much it actually landed in the account every single month. So again, that was very difficult when it came to the business. So that's lesson number one, all about finances and accounting. So the second lesson was actually the business model. So with this business model, we'll actually partner with these agencies, we'll now implement our systems for them, and then we'll take our money on the back end when it came to doing deals with them. Now, yes, we'll charge them an upfront fee, but we was really relying on actually getting monthly commissions from the deal flow. Now, because we couldn't actually manage their internal deal flow because they had their own systems as well outside of what we was implementing for them, I wasn't actually able to track how many deals they were doing every single month. So let's say we could have gained, £10,000 commission from one estate agency. They may only showcase to us £2,000 worth of commission. And because that internal system wasn't tracked, we was actually missing out on a lot of revenue. Secondly, we actually didn't have a back end or an upsell offer. And one of the most important things that buyers like is customer long-time value. And what that essentially means is that customer going to buy for you repeatedly over and over again. With us, with most of our customers, it was just a one-time purchase. We implemented the system, they loved it, they got the results. We would do deals with them. It wasn't actually an ongoing, reoccurring revenue. Now, one thing I was very interested in is that a buyer once said to me, Denzel, I'd rather have the company making £50,000 every single month in reoccurring revenue than £70,000 every single month in fluctuating revenue with no predictability as to how much money is coming in every single month. And that's when it made me realize that I'm actually just running a lifestyle business, not an actual company where I can actually do serious cash flow projections into the future. Now, another issue with the business model, well, I don't think they specifically saw this as an issue, but I saw it as an issue when it came to the due diligence process, and that was how we acquired our leads. Now, to be fair, all of our traffic, I'd say 95% were through paid ads. And although that's good because you can actually have some predictability with it, you know that you can put X amount in and get X amount out. The only issue with that is that when ads weren't working, or let's say, for example, our ads account got shut down, that now led us to have no reliable source of getting leads. And so I remember when we made some changes to our ads, that month, our revenue went down shockingly. And that's because we was too dependent on only one system to get leads. So that's another very important thing, to always diversify your lead flow. So as a whole, that meant that the business model was built for lifestyle, but wasn't built for long-term predictability. So for all of the business owners out there, it's very important to actually differentiate what type of company do you want to make. Is it something that's actually building to last, or just something that's just building to cash flow? I think once you can differentiate that, it's going to actually benefit you a lot in the long term. Now, the next issue, lesson 3, which is the most common issue when it comes to selling the business, is founder dependency. Now, as me, the founder, a lot of people actually bought into the business because of myself. And I was the one that was actually moving when it came to actually managing the lead flow, and also when it came to closing a lot of the deals. I thought that was all good because I was only spending about 4 or 5 hours on the business. As I mentioned earlier, I had a lot of team members, but what I realized that it wasn't still running in the same way. One thing I actually tried to do was actually even rebrand the business. And I noticed that when I rebranded the business, took myself out of the ads, revenue started dropping every single month. And that made me realize that as much as I thought that the business was systemized, which it was to an extent, it was still too dependent on myself. Not only that, I think clients had too much access to me. And now this is depending on the level of service that you want to provide. Because clients had too much access to me, the people that I hired didn't actually have enough work to do. So I was hiring based off potential, not based on what's actually needed. So what I realized is that I was still getting direct messages to myself, which now meant I had to spend more time on the business and was doing basically my staff members' jobs. Now that was a difficult pill to swallow because of me, I love customer service, I love people, I love always going above and beyond for everyone. So I didn't want to be that person that's saying, look, go speak to a team member. What I would do next time differently is make sure there's actually a clear hierarchy when it comes to communications. And that's not because I think I'm better than anyone else, but just more so for actual having a system in place where if I now have to go away for 2 months or 3 months, the business delivery, the business acquisition won't fluctuate like it was previously. One thing that I always preach about is that a business that can't run without you is basically another job. And unless you're trying to create yourself another job, you need to have your systems in place and make sure that the business isn't dependent on you. Now, my fourth lesson was, I would say, a form of complacency. If I'm honest with you, when I heard the number that they were offering me, I knew it was life-changing. So I got quite complacent. I was even picturing in my head how I'm already spending the money. I think naturally I saw myself spending less and less time on the business to continue to focus on my other ventures to make sure that they're progressing as they actually were. What that led to was, naturally the team culture was slipping a little bit, level of service was slipping a little bit, and things that I used to actually be very on top of in terms of performance, tracking KPIs and all of these things, I was kind of let slide because I thought, you know what, the business is going to be sold and I can now move on to focusing on what matters the most, which is the other business that I'm building for the generational wealth. Now, what happened there was absolutely one of the worst decisions I made. And that's what led to a downward spiral because as I didn't actually end up filling a company, which I'll go into a little bit later, revenue was dropping, I still had my fixed costs, I was getting 1 or 2 customer refunds, everything was just going downhill from there. And I think now that I was starting to affect my personal life, I started to fall out of love with the business, I completely started detaching myself from the business, and every single month things were just getting worse and worse and worse. And that's why I feel like I realized I lost the deal because I feel like the buyers actually realized that, look, although it's a good business that's making a good amount of money, there's not longevity in this business. Well, as for now, as it was currently structured. And that was one of the saddest moments, I'll say, of my business career because I was on such a high where I had probably the best year of my life, made more money than I've ever made, to just seeing, money going down, having to reinvest profits, taxes, which I didn't put money aside for. And yeah, it was just like a very tough period. And I think naturally from there, I started trying to cut back things to save on certain expenses. And yeah, it all went downward spiral from there. So I think with that, it was so important not to take your foot off the gas. I feel like, if anything, when someone's doing due diligence on your business to buy it, is a time you've got to be stepping down and putting in as much work as possible to actually prove to them that it's something that can actually work in the long term. Cool. Now, the next lesson I learned, well, I wouldn't really call this a lesson. It's more so an observation, which again, anyone who's trying to build a company to exit needs to understand is the importance of tech. Now, naturally, I'm not really a tech savvy person. And I did have a COO who was actually operating in the business and who I still work with very, very closely. Now, to me, I thought tech was just like a simple, white label software, which I can now use. But it's actually an integrated tech system that can actually have your own unique IP and your own unique identity where that other clients, can't easily replicate. Why? Because when it comes to a company buying your business, they just need to think, is it worth me actually just replicating this business and create it internally? Or should I buy this company and merge it within my company? Tech creates leverage. And I think one thing that Alex Hormozi always talks about is actually increasing your business enterprise value. I think that's what tech can do. And even more importantly, AI. Now, again, one thing that I've noticed as well with a lot of companies who have sold, because I like to study companies as to why they have sold, is implementing AI. Now, literally, implementing AI can massively increase your multiple as to what their company is going to acquire you from. AI is not just having your own ChatGPT bot, but it's actually integrating AI into your system, whether it's when it comes to analyzing your deals, which we do have now, whether it's coming to getting leads, like whatever it may be, but actually having your own unique way of integrating AI. Now, again, I know that if I actually implemented these things as well, it would definitely increase the amount that they would have bought the company for if they actually decided to go ahead. Now, I think the last lesson I meant, which was more like a life lesson, was actually the ego and the mindset. It's very easy to be positive when things are going well. But when you now start seeing things break within your system, and now that's now reflecting into your internal life as well, that's when it can be difficult. And I think with me, as I mentioned, from going from such a high to like constant lows. During that period of time, I just felt like so many areas of my life were being attacked. But now one thing I'm a big believer in as a Christian is that God gives you tests in different ways to actually develop your character. You might pay for patience and you might have an annoying client. You might need to pray for financial discipline and then God will give you unexpected costs. So there's so many ways which God will actually try to teach you these lessons. I think during that period of time, I would say my ego was hit, but I think more so my test of character was hit. And I think that period of time actually built me a lot because I know that God's got a lot more prepared for me. And I feel like I'm so happy it happened at that stage rather than happen at a stage where my company's now worth 50 million. So again, a lot of these lessons learned, I can actually now apply when it comes to building future businesses. And I think it's something that I shouldn't have let slip in terms of momentum. I think, yes, we're naturally human and I'm naturally a positive and resilient person who's been through a lot in life. I think because of that period of time, how it happened and the things around me that was happening, it did have a very negative effect on me. And I think, as I mentioned, I lost momentum. I stopped posting as much content on YouTube. I was just in my own lane. And it wasn't that I was stopping business. And it's like another very important lesson. I was now trying to think of the next best thing because I kind of felt like I loved that business. But then every time I was starting something new or redirecting myself, I saw that there was a big struggle, or I saw that I was always redirecting me back to the initial source, which was that initial business, because it does align with my long-term goals. Sometimes it's just about focus. Focus on the right thing for a long period of time and you see the results. Hurdles may come your way, but again, if you stay loyal to it, the business will stay loyal to you. Cool, so what's next for me? As I mentioned, I've still got my portfolio, I've still got my luxury buyers agency, and I actually still do have this company. It's just that I kind of took my foot off the gas. And what I've been doing with the team is rebuilding in the background. So we're going to relaunch it again actually in the next month or so, and this time a lot better. We're going to continue to target, the boutique agencies, real estate advisors, brokers, and also we're going to actually start having a global approach because we've realized that we've got a lot of traffic from global advisors. And as I mentioned, the main concept of the business is the deal flow. Them getting in is just for more so to be under our branding. And the main thing is how many deals we can do with them. Because, I watch so many brokers who I look up to, such as, Ryan Serhan and others, and seeing that the amount of deal flow that they get under their brand is so important. So with us, we actually now need to track that in a more sustainable way. Like how can we actually ensure that every client that we're getting, and especially from abroad, they're actually integrating into our system, which will now lead to longevity when it comes to deals. Because I think deals in the property business and your brand is so important. And if we can merge the two together, it can be a business that can sell for even more in the future. Now, my goal isn't just on selling the business now, it's on actually building in the long term and having a full funnel where we get the brokers, we do more deals with them, and they now actually join us within our luxury buyers agency, because that's always the end goal. Continue to work with high enough individuals who are buying high-end property. So I guess my final message for everyone is that if you're building a business right now, understand, are you building for cash flow or are you building for longevity? And make sure you have the right things in place to actually build it the way you want to. Also systems, integrate the right systems is so important. Have a system and tracking for every single thing. Hire off experience that have potential, and always start with the end in mind. I think when you're now making a change or you're diverting, make sure you're doing it strategically, not just based off a random idea, but actually have a full process in place to actually start implementing change. I think so many decisions I made were just so irrational, and I think that led to a massive dip in revenue. I think if you do everything strategically and you have contingencies in place, it can actually benefit you long term. So I guess for those who are new to my channel, continue to follow me if you want to see more content about real estate, about business, about working with high enough individual clients. And if you're a real estate advisor, broker, you own your own boutique agency, you're a sourcer, and you want to know more about our system where we can actually partner with you, to close more deals, then just click the link below. Feel free to book a call with me, and I look forward to potentially working with you in the future. So thank you guys for watching this video. We really appreciate it, and I look forward to seeing you guys more. Please like, comment, and subscribe, and I'll see you on the next one. And I promise I'll be back with more content.